This is Zach Harris here from Strategic Asset Management in Dublin. Today we're going to talk about risk management in financial trading. Now, first of all, we have to define what is risk management. It is the process of identification, analysis, and either acceptance of uncertainty in investment decision making. Having a strategic risk management is crucial. It gives you full control of the possible outcome and minimizes the risk from any negative event. Now, a lot of people wonder what is the risk management features, or what are the risk management features can be applied when you trade in the financial markets. Well, I'm gonna talk about very basic risk management feature, and it is the most used ones as well. It is called stop loss control. That's what we use when we place any trades in the markets. What is stop loss control is the order to the exchange. Once the share price drops below a certain point, you want your trade to be automatically stopped out. Okay, now let's see how does a stop loss control work. Now we're gonna look at the chart. It's one of the companies we like to trade on, and the name of the company here is Whitbread. The market cap of this company is over 9 billion, so it's a massive company, and we love to trade on that company, and it's one of the blue chip companies we like to trade on. And the reason for that is that their share price actually moves in certain patterns and there's in certain price range that suits our strategies the best. Okay, now let me just explain it to you what this chart actually shown us. On the right hand side we've got the share prices. Now remember that share prices are always given in pence, so a lot of people think it's £5,000 per share, but no, it's 5,000 pence, which means £50 per share there. Okay, now what else you see? You see the blue line here. What blue line is the share price line, going up and down. It was going up, then it's dropped, then going up, then dropped, then going up, dropped. So it will probably look like you had beat rate going up and down in the monitor. Okay, but you also see the green line as well. Green line is one of the indicator we use. It is also known as moving average line. Now I'm gonna show you the entry levels. So what happens is, remember one thing, share prices, they do not go up or down forever. If they go up, eventually they take a turn and drop down, and when they drop enough, okay, eventually they will take a turn and rise back up. Okay, so they don't just go up or go down forever. So it's all about buying and selling at the right time. But let's talk about the risk management. How do we use risk management feature on that? So for example here, share prices were declining. It was 48, then over here it was 46 pound, then all of a sudden it took a turn and it started rising. When their share prices took a turn and start rising, it's breaking through our indicator line, which is a green line in upward direction. So you see this intersection, that could be our entry point. When I say entry point, means that that is where we can actually buy shares. Just like that, we got another entry there when it breaks through green line in upward direction, when it's rising, when it's going up, not when it's going down, when it's going up. Just like that, we have another entry level here, here, here. You could also call it that one as well if you didn't buy it there, but let's just talk about the entry levels we have in place on this chart. So remember, let's say you buy shares here at the price of, we're looking at the price roughly about £47 there. Okay, this is our opening level. Okay, when you buy shares, there's only two possible outcomes. Either your share prices are gonna go up or gonna go down. If they go up, you want to make sure you maximize this opportunity and you maximize the potential profits. But what if it turns against you? You want to be making sure you minimizes your risk too, so you will not lose more than what you can afford or what you can't afford. Okay, so the way it works is we buy shares here, but we put out a stop loss for, let's say, on £46. It's roughly just over 2%. So what we're doing here is we're buying share here. If it goes for us, we will capture all that. Okay, but if it turns against us, we are minimizing our risk, and we are only risking 2% of our overall capital. The same strategy applied here, Same risk management strategy applied here, here, and here. Okay, so you understand. So when we're placing a trade, we're minimizing a risk. That's how we use a risk management feature. Okay, now in a nutshell, risk is like fire. If controlled, it will help you. If uncontrolled, it will rise up and destroy you. Every time we place a trade, we never trade without a stop loss feature. We only risk in between 2 to 3% of our overall capital, which means risking 40 to 60 quid on 2 grand. Or if you're trading with 10k, you're only risking 200 to 300 quid. But remember that it's all about having good risk reward management in place to maximize your opportunity, and that's exactly what we teach actually our clients here at Strategic Asset Management. Guys, if you like this video, please subscribe to our channel on YouTube.